Imagine waking up to find your money is worth less than it was yesterday. Prices are soaring, and financial markets are in turmoil. Sounds like a nightmare, right? But this is becoming the new reality for many around the world. Today, we're diving into a phenomenon that's driving investors to seek refuge in gold, a precious metal that's hitting historic highs. Why is this happening, and what does it mean for your future? Let's unravel the story behind gold's meteoric rise and how it's connected to the turbulence shaking our global economy. Buckle up, because this is a journey you don't want to miss. The gold rush of 2024. So why has gold always been a symbol of wealth and security? Let's start by diving into a brief history. Gold has been treasured by humans for thousands of years. Its history as a symbol of wealth and power dates back to ancient civilizations, such as the Egyptians, who used it in tombs and temples. Gold's inherent properties, its rarity, malleability, and resistance to tarnish, made it an ideal medium of exchange and store of value. Throughout history, gold has been used to back currencies, build fortunes, and symbolize prosperity and stability. But how does that connect with its recent spike in gold prices? Currently, gold is trading at around $22.72 per ounce, with intraday highs reaching $22.86. To put this in context, the last significant spike was in August 2020 when prices hit approximately $20.70 per ounce, driven by pandemic-related economic uncertainties. This recent surge represents not just a numerical increase, but a reflection of broader economic anxieties. For everyday people, this spike in gold prices can impact various aspects of life. Investors might see higher returns on gold holdings, while those in jewelry markets could face increased costs. So how does this affect you? Higher gold prices often correlate with economic instability. It's a signal that investors are wary of other markets, preferring the tried and true safety of gold. Whether you're directly investing in gold or just observing market trends, these shifts can influence financial decisions and perceptions of economic health. But what exactly has caused this recent surge? Historically, gold has been considered a safe haven asset. But why is that? During times of war and conflict, uncertainty spikes. Markets become volatile, and the future of economies grows more unpredictable. In these periods, investors seek stability and security for their assets. Gold, unlike stocks or fiat currencies, isn't tied to any single country's economic health or political stability. It has intrinsic value that doesn't fluctuate wildly based on government policies or corporate earnings. During wars, the stability of nations can be severely tested. For example, the Russia-Ukraine conflict has created significant instability in Eastern Europe. This affects global markets as supply chains are disrupted, energy prices fluctuate, and geopolitical tensions rise. Investors respond by moving their money into gold, which tends to retain its value even when other assets are declining. But let's look at gold in comparison to other investment options. Take the stock market, for example. Is gold safer than stocks? Historically, gold has been less volatile compared to stocks during periods of extreme uncertainty. You see, stocks represent ownership in companies, which can be affected by economic downturns, poor earnings, and political instability. Gold, on the other hand, doesn't produce earnings or dividends but holds value because of its physical properties and historical significance. Take the 2008 financial crisis. While stock markets around the world plummeted, gold prices increased as investors sought refuge from the collapsing financial systems. Similarly, during the early months of the pandemic, gold prices surged while stock markets experienced severe drops as businesses shut and the future was uncertain. Gold's stability comes from its limited supply and the fact that it has been a store of value for thousands of years. It's not subject to the same risks as stocks, which can be influenced by corporate performance and market sentiment. This makes gold a safer bet during times of crisis. So when geopolitical tensions rise, such as with the Russia-Ukraine conflict, investors turn to gold to hedge against the unpredictability and potential losses in other markets. It's a way to preserve wealth when other investments might be too risky. This conflict disrupts not only regional stability but also has broader implications for global markets. As tensions in the Middle East rise, the risk of wider regional conflict increases, affecting oil prices and global trade routes, thereby creating more uncertainty in financial markets. Historically, the Middle East has been a volatile region, and conflicts here often lead to spikes in global oil prices and shifts in investor sentiment. Investors seek the stability that gold provides, moving their assets into gold to mitigate risks associated with geopolitical turmoil. The combined effect of these conflicts is a heightened sense of global uncertainty, driving more investors to seek the relative safety of gold. This influx of demand is a key factor pushing gold prices to historic highs. These expected rate cuts make gold a more appealing investment, driving its prices higher. And then there's the role of central banks. Countries like China are ramping up their gold reserves. With a shaky real estate sector and sluggish economic growth, Chinese investors, both private and governmental, are turning to gold as a hedge against these instabilities. China isn't alone in increasing its gold reserves. Several other countries are also stockpiling gold to secure their economies amid global uncertainties. Countries like Russia, India, Turkey, and Germany are all boosting their gold reserves significantly. Combined, these nations hold thousands of metric tons of gold. For instance, Russia and China alone hold over 4,300 metric tons, worth hundreds of billions of dollars at current prices. This trend suggests that these countries are preparing for a potentially unstable future of economic downturns, currency devaluation, and geopolitical instability. By amassing gold, they are hedging against economic downturns, currency devaluation, and geopolitical turmoil. Gold serves as a financial safety net, offering stability when other assets may be too risky. To put it into perspective, 1 metric ton of gold is worth about $73 million. So these countries are securing billions in gold to protect their economies. Do you think central banks are making the right move by increasing gold reserves? Share your thoughts below. Imagine this. You wake up one day to find that your grocery bill has doubled, your rent has increased, and gas prices are through the roof. Sound familiar? That's the reality for many people right now. Inflation is at the heart of this crisis. The latest data shows a 201.8% year-over-year increase in the core personal consumption expenditures (PCE) price index, with consumer spending up 0.8% last month. What does that mean for you? Every trip to the grocery store feels more expensive. Basics like milk, bread, and eggs have seen significant price hikes. Your weekly budget doesn't stretch as far as it used to, forcing you to make tough choices about what to buy and what to leave behind. Rent and mortgage rates are climbing. For renters, it means higher monthly payments. Homeowners are seeing increased costs in property taxes and home maintenance. Finding affordable housing is becoming more challenging, impacting your ability to save and invest for the future. Fuel prices have surged, making commuting to work and running errands more costly. If you rely on a car, you're likely feeling the pinch at the pump, with each fill-up eating into your budget. Even public transportation fares are rising, adding to your financial strain. Electricity, heating, and water bills are also on the rise. Keeping your home warm in the winter or cool in the summer is becoming more expensive. Inflation affects everything from clothes to healthcare. The price of everyday items continues to climb, making it harder to afford the same quality of life you once had. Services like dining out, haircuts, and entertainment are also becoming pricier. So why is this happening? Well, it's a mix of factors at play. Supply chain disruptions, increased demand post-pandemic, and geopolitical tensions are all contributing to higher prices. Central banks, including those in the US, China, and Europe, are increasing their gold reserves as a hedge against economic instability and currency devaluation. For you, this means that while your costs are rising, global financial systems are bracing for more uncertainty. Uncertainty which is almost certainly going to directly impact you. So, what does all this mean for the average investor? Well, with gold prices on the rise, it might be time to consider physical gold as a part of your investment portfolio. Analysts are predicting that this bullish trend could continue, potentially pushing gold prices even higher. Some experts believe we could see gold prices climb well above $2,300 per ounce in the coming months. With ongoing geopolitical tensions and economic uncertainties, gold is becoming a go-to asset for those looking to safeguard their wealth. But what do you think? Will gold keep climbing, Predict the future price in the comments. That's it for today. If you found this video insightful, be sure to like, comment, and subscribe for more content like this. Thanks for watching, and I'll see you in the next one.